back to the channel and nice to see you all. Powerful Hammer and Hidden Hammer Trading Strategy Guide. Hammer candlestick pattern has always been the most powerful indication of trend reversal to enter the trade among traders when it is seen at the bottom of a downtrend. We can also take advantage of candlestick mat blending to find the hidden hammer by blending 2, 3, 4 or more candles at the bottom of a downtrend to find a profitable entry. It is pretty common among traders that whenever they see a hammer candlestick pattern anywhere in the chart, the first thing it comes in their mind is to go long because the market is about to reverse higher. Soon after, the trend collapse and reverse lower, trigger their stop loss and put them out of the trade. When you see a hammer randomly by itself, it doesn't mean the trend is reversing to go higher. Hammer never tell you the direction of the trend. When trend is reversing, there are so many candles that are responsible for this action, and hammer is one of them. In this video, I'm going to explain how you use hammer candlestick pattern to enter the trade and make profit with a big probability. Since hammer candlestick is a bullish pin bar, let me show you what is the definition of a bullish and bearish pin bar nobody tell you, and how you recognize hammer candlestick from so many different kind of pin bar, which hammer is one of them, nobody tell you. What is the definition of bullish and bearish pin bar and hammer? In this graph, you see so many different pin bar with different color and different body size, and all of them has the same length. If the body of the pin bar be above the midsection of the total length, it's considered as a bullish pin bar. Did you know that? Now you know. If the body be a small relative to the range, and the upper shadow be a small and or negligible, then the bullish pin bar is called hammer, regardless of the color. You can also use Fibonacci retracement tool to find out your pin bar is a hammer or not, since you want to be certain. Now put the zero Fibonacci tool on the high of the pin bar and 100 on the low of the pin bar. Now, if the body of any of these pin bar be above the 38.2%, you consider that pin bar as a hammer. So this is not a pin bar, this is not a hammer, because the body is below 38.2%. This is not a hammer, this is not a hammer, but this is a hammer. This considered as a hammer, and this considered as a hammer. Among these three hammers, this is, with the green color, it considered as the strongest hammer. This is the second strongest, and this is the third strongest. Now, in this pin bar, since the sellers first push the price down all the way to the end, and then the buyers reject this lowest price and push the price higher past the midsection and then close above the midsection, this considered as all these pin bar as bullish pin bar, regardless of the color. This is a bullish pin bar. This is a bullish pin bar, and this is a bullish pin bar. So you know how to recognize a bullish pin bar and a bullish hammer. Now, in the next slide, I'm going to show you what is the bearish pin bar and also bearish hammer. What is the definition of a bearish pin bar? In this graph, let's assume the range of all these pin bars are all the same. You see so many different pin bars with different colors and different body size. If the body of the pin bar be below the midsection of the total length, it is considered as a bearish pin bar, regardless of the color. If the body be small relative to the range, and the lower shadow be small or negligible, then the pin bar is considered as a shooting star, regardless of the color. You can also use Fibonacci retracement tool to find out which one is a shooting star. Now put the 0 of the retracement tool on the lower shadow of this pin bar and put 100 on the upper shadow. Now if the body of any of these pin bar be below the 38.2%, then that pin bar considered as shooting star, regardless of the color. So among these 6 pin bars, this is not a shooting star, this is not a shooting star, this is not a shooting star because the body is not below the 38.2%. This is not a shooting star, but these two, they are shooting star, and among these two shooting star, this is the strongest bearish shooting star, and after that this is the second strongest. So now that you know how you recognize a bearish pin bar and a bearish shooting star, now let me show you how bullish and bearish hammer is formed. How bullish and bearish hammer candlestick pattern is formed. Let's assume the market opened at this point and the sellers push the price down, indicated with the red color, all the way up to here. And now here, the buyers reject this lower price and push the price higher, all the way up, all the way to where the price opened in the morning, leaving a lower shadow, and then the buyers still push the price up all the way, and then again it get rejected by the small presence of sellers in the market and leaving an upper shadow, and the market closes at this point. So this is a strong bullish hammer indicated with the green color. Now let's assume the market again open at this price at this point, and the price go up. As soon as it go up, it suddenly it rejected by the sellers in the market, and the sellers want to push the price lower, leaving an upper shadow. The sellers push the price again lower and lower, all the way down here, and again the buyers didn't want this lower price and push the price higher, and all the way up to here, leaving a lower shadow, and the price closes at this point. So this is a bearish hammer but with bullish power. So both of them has a bullish power, strong bullish power. This is how bullish and bearish hammer candlestick is formed. How to enter the trade using single candlestick hammer or hidden hammer. If you watch my previous videos, the first thing I always emphasize that whenever you want to enter the market, you should follow these steps. Number one, find the overall direction of the trend by using longer period simple moving average with 50, 100 or 200 periods, SMA 50, SMA 100 or SMA 200, to check whether the trend is going upward, downward or consolidating. For example, if you see the trend is above the SMA 200, then the trend is going upward direction and you should prepare to go long. If the price is below the SMA 200, then the trend is going downward and you should prepare to go short. If the moving average shows flat, the price is in range, consolidation or sideways market, and you should wait for a good opportunity to enter the trade. Number two, identify your area of value like support and resistance, dynamic trend line, moving averages, wedges, triangle, channel, and so on, and wait for the price come close to the market structure. This way, you see the bullish or bearish pressure step in and increase your odds to make profit when you enter the trade. Number three, find pattern and formation as trigger point to enter the trade. When price come close to the market structure or area of values, then look for trigger point like hammer, which is a sign of a strong bullish. Set your entry to enter the trade. For example, if you want to go long, then look for hammer or hidden hammer like bullish engulfing, morning star, tweezer bottom, and so on. And if you blend these pattern with candlestick mat blending, for sure you will get a hammer, which is a sign of bullishness. Number four, go to one step lower time frame to find precise location to enter the trade. This way you may save money, and I will show you how. And finally, number five, use ATR value to put your stop loss. Always put your stop loss a distance away from your area of value if you do not want your stop loss be triggered and you be out of the trade prematurely. Let's have a real example. Example number one, this is silver stock 4H time frame. As you see, the price is trending nicely upward and the price is above the SMA 100. Act here as dynamic support and area of value. The price here is coming close to the area of value, and this is a powerful hammer as can act as entry trigger on December 16, 3 a.m. So I can enter the trade at the close price of the next bullish candle and put my stop loss to ATR below this close price of this bullish candle for a stop loss and put 4 ATR above the close price of this bullish candle for profit target. So this is going to be my stop loss and this is my profit target, and this is also the information for that bullish candle. I can also go to 1 hour time frame and find my entry point at 5 a.m. instead of 7 a.m. here 2 hours before. This way I can gain 29 cents. Let me show you how you can enter the trade in 1 hour time frame. Example number one, continue. This is the same silver stock. Instead of a 4H time frame, it's H1 time frame, and this is the same location as previous slide, December 16, 3 a.m. So the next candle is a dragonfly doji, which is at 4 a.m., which is a sign of bullishness and the trigger point. So after this, you see that the trend reverses. I can enter the trade at the close price of this bullish candle, and the close price of this bullish candle is $22.94, which is 29 cents less than when we entered the trade at 4H time frame. And the ATR value for this candle is 0.163. So I can enter the trade at the close price of this candle and put 2 ATR below the close price for a stop loss, and 4 ATR above this close price for profit target. This way I can get 2-to-1 reward risk ratio, and this is going to be my stop loss, and this is going to be my profit target. This is how you can use powerful hammer to enter the trade. Example number 2. This is USD-JPY pair and 4H time frame. As I explained earlier, to enter the trade, first we should check the direction of the trend, and since the price is above the SMA 100, the trend is in upward direction, and we should look to go long or enter the trade. Second, we look where the price come close to the market structure or area of value. As you see, the price is coming close to the market structure, penetrate inside the dynamic support, and then it gets rejected by dynamic support and heading upward. This is an excellent location to enter the trade. So if we blend these two candles with candlestick math blending, you see the outcome is nothing but a strong bullish hammer. Uh, so this is an excellent entry trigger. So we can enter the trade at the close price of this equivalent and put our stop loss 2 ATR below the close price for stop loss, and 4 ATR above the close price for profit target. So this way we get 2-to-1 reward risk ratio, and this is going to be our stop loss, and this is our profit target, and also this is the information for this equivalent. You can also go to 1 hour time frame and enter the trade the same way as I explained here. I hope you enjoyed this video. Wish all of you good luck, and don't forget to smash the subscriber button.
That's all, folks. If you like this video, thumbs up and subscribe. Thanks for watching. Take care and see you next time.